Hi, I am CS Agrawal, your very own direct and indirect tax faculty. I have pleasure in presenting CWA June 2011 Applied Direct Taxation paper fully solved, analyzed and explained as per assessment year 11-12. These are my batches. Classes available at Lakshmi Nagar, Patel Nagar and Uttam Nagar. For latest detail, please visit us at taxbykk.blogspot.com. There were total 8 questions. Question 1 was compulsory, and from remaining 7 questions, students were required to attempt any 5. Pretty easy? First question is fill up the blanks of 1 marks each. Total marks 12. Let us see the questions. Mr. Nathan acquired on 30th March 2011 a building for rupees 10 lakhs when the State Stamp Valuation Authority adopted rupees 15 lakhs for stamp duty purpose. The amount taxable in the hands of Mr. Nathan under section 56 subsection 2 will be nil. Why? As per the amended provisions, purchase of immovable property for less than circle rate, section 56 subsection 2 is not applicable. Section 56 subsection 2 is applicable only when the property is gifted. However, as per section 50C, 15 lakh is the full value of consideration for the purpose of computation of capital gain. Second question. The due date for filing return of income under section 139 subsection 1 in the case of individual assessee having turnover above rupees 60 lakh is 30th September of the relevant assessment year. Since as per section 44AB, if turnover exceeds rupees 16 lakh, the audit is mandatory. Third, where an employee is paid fixed medical allowance of rupees 1000 per month, a sum of rupees 12,000 is taxable per annum. Had it was medical facilities, the assessee could have claimed an exemption of rupees 15,000 per annum. Fourth, salary paid to a working partner of a firm is chargeable to income tax in the hands of such partner under the head profits and gains from business or profession. This is as per section 28. Fifth, total tax payable on a lottery income of rupees 3 lakh as per section 115 BB is rupees 90,000. Rate of tax is 30%. I am not adding education cess at the rate of 3% since education cess is provided in the Finance Act and not under section 115 BB. Sixth, payment of education loan. Interest is deductible under section 80E. Earlier, principal amount was also deductible under section 80E. Seventh, property held under trust of charitable oblique religious purpose is exempt from wealth tax. This is as per section 5 subsection 1. Eighth, surcharge is payable by Indian companies when the total income exceeds 1 crore. The rate of surcharge for the assessment year 11-12 is 7.5%. For the assessment year 12-13 it is 5%. Ninth, Maximum amount exempt in respect of transport allowance granted to an employee for commuting between residence and place of work is rupees 800 per month. 10th, claim of depreciation is mandatory while computing business income of the assessee. Earlier, the Supreme Court had held that claim of depreciation is optional, but from the amendment of income tax, now claim of depreciation is mandatory. 11th, advance tax is payable in 3 installments by a non-corporate assessee. For corporate assessee, it is 4 installments. 12th, the minimum alternate tax rate applicable to certain companies is 18% of the book profits. From the assessment year 12-13, it is 18.5%. Question number 1 small b. Choose the correct alternative of 5 marks. Question number 1. An individual aged 28 years born in India left for employment in France on 30th October 2010. This person is leaving India for the purpose of employment. Therefore, he falls in the exception to the basic condition and 60 days condition is not applicable to him. Only 182 days condition is required to be checked. He is in India from 1st April 2010 to 30th September 2010. That is for 183 days in India. The first basic condition is satisfied. Visit outside India is for the first time. It means he is satisfying both the additional condition. First, he was resident in India in at least 2 out of 10 previous year, and he was present in India for at least 730 days in last 7 years immediately preceding the relevant previous year. Therefore, his residential status is resident and ordinarily resident. Second, Xmas Charities received anonymous donation of rupees 5 lakhs. The said sum is partly exempt and partly taxable. The provision are: in case anonymous donations is received by wholly charitable trust, then such anonymous donation is taxable at the rate of 30% flat of the amount which is excess of the higher of the following: 5% of the total donations, it includes corpus donations also, received by the assessee, or rupees 1 lakh. It means minimum exemption is rupees 1 lakh. Mr. A let out his property to Mr. B. Mr. B sublet the property to Mr. C. The income from subletting in the hands of Mr. B will be income from other sources or business income depending on facts. This income is not taxable under the head house property since Mr. B is not the owner. Neither he is deemed owner. Fourth, Miss Padma received rupees 50,000 on 13th October 2010, being the unrealized rent pertaining to an earlier year, consequent to court decree. The property to which the unrealized rent relates was sold in the year 2006-2007. The unrealized rent amount received now is fully taxable as income from house property. This is as per section 25AA. Guest house is liable for well tax regardless of the distance or location. This is as per section 2 subsection EA clause 1. The distance is provided for the farmhouse or for the urban land and not for the guest home / guest house. State with reasons whether the following statements are true or false. 1. Where Mr. VKS, an Indian resident, received rupees 50,000 as dividend from a foreign company, the same is taxable. The statement is true. Dividend from foreign company is taxable in India on resident basis. Dividend from Indian company is exempt from tax under section 10 subsection 34, and whereas dividend from foreign company is taxable. 2. Farmhouse rent received from tenant of agricultural land is chargeable to tax as income from house property. This statement is true. This is as per section 2 subsection 1A clause C. However, exemption can be claimed under section 10 subsection 1 being an agricultural income. Third, motor cars held by a dealer in vehicles for trading purposes are treated as assets for purposes of wealth tax. The statement is false. Asset held as stock in trade not treated as an asset. Fourth, income from transfer of self-generated goodwill of a profession is not chargeable to tax under the head capital gains. This statement is true since, as per Supreme Court judgment, those assets whose cost of acquisition cannot be determined cannot be subjected to capital gain. Remaining solutions to be uploaded soon. Keep visiting taxbykk.blogspot.com.